Hello and welcome to the Leadership in Insurance podcast, the Liip. I'm your host, Alex Bond, and I'm very lucky today to be joined by Mike Minnett. Mike and I connected on LinkedIn. As he just put it, we've stalked each other for a little while now, and I thought it was time we engaged. He runs a business called Portabl, which is set in the gig economy. So it's the second business actually that we talked to about the gig economy. So, but very different angle on it. So I'd be really interested to get into that. But he's also had a fascinating career, serial entrepreneur, and self-proclaimed ideas guy. So we want to know what that sounds like. So, so Mike, welcome to the podcast.
Yeah, no pressure. my team usually saying that he's also the no ideas guy, but that's okay. You can charge it.
I have a confession to make that I actually put a rant on LinkedIn about people calling themselves things like chief ideas guy and chief happiness officer. But it was mainly directed at people that had it but were employed, and I was like, that's great until you want to find a new job, and then everyone's like, so what does a chief happiness officer do?
Yeah.
So what does the chief ideas do?
Probably the most grumpiest person in the office as well. The irony. Yeah, look, Alex. Yeah, happy to be here. So thanks for getting us on. And it's interesting, just that opening line there, the gig economy. I think it's probably a good place to start because it's such a broad spectrum. There's a lot of badges that get applied to it, but to put it into some sort of context, and it's probably what attracted us there in the first place. You'll see these headline stats now, and there's more. It's actually bigger now and accelerated because of COVID, but sort of 50% of the world's workforce were to be working independently in some shape or form. And a chunk of that is sort of the new gig economy as we know it. And that's gig, pure gig, Uber, Deliveroo, millennials, some of these companies 5-6 years old, that term gig work, only a few years old. And that's sort of down that end of the spectrum, but there's a whole other end of the spectrum, which is around those people who've retired early, can't afford their 30-year retirement, are coming back into the workforce, picking up gigs or part-time or contract or contingent. And the other side of the fence, there's a whole world there. They can afford their 30-year retirement, but with longevity now, retiring 55, 60, 65, they've still got 10, 20 years of value to be generating positive. So they are piling back into the workforce, picking up gigs. But, back in my day, those gigs, contracts, assignments, projects. So that sort of that end of the spectrum, everything in between, freelancers, self-employed, contingent workers, liquid, flexible, probably a bit of remote now. That's what makes up this gig economy in its broadest sense.
I think that's important to frame that because when I hear gig economy, I know that people generally, they're thinking Uber, Deliveroo, and actually not including, very high earning professionals that have a portfolio of companies, whether they be, portfolio CFOs or project managers or program managers, and they fit within that because still don't have those protections of an employed individual, right? Which is,
there's still a whole group out there where when you talk about we're involved in the freelance economy or the gig economy, they think gigs, that's what musicians used to perform, right? So they're musicians or freelancers, that's artists, right? And, it's, yes, all of the above, but those badges that sit across the top of that and portfolio lifestyle, is very much part of a lot of the thinking that goes into what is the gig economy. Just gigs, small pieces of discrete work, often through more than one organization at a time. So you'll have guys who are sort of driving Uber at the day and Deliveroo on the weekend, sort of, bringing together a number of gigs, which collectively makes up their work.
So talk to me about Portabl. Just give everyone at home like the sort of, I suppose, the elevator pitch. What is it? What's the objective? And
the elevator pitch.
You don't have to. No pressure. You can take as much.
No. It's like we're deep into our first fundraise, so the pitch.
Yeah.
And you keep sort of shifting and flowing. But fundamentally, Portabl is about providing a safety net and a structure to all these people who are now working, independently as part of these new economies. Because when they've been full-time employees, they've been well looked after. Safety net structures, something happens to them, their family, they're taken care of, employee benefits, you lose your laptop, it gets replaced in the afternoon. Lots. The day they go out on their own or start out on their own, they've got absolutely nothing. So all we're looking to do is replicate that old model in the new world. Instead of being an employee of Portabl, you'll be a member of Portabl, and we're looking to take care of you just like your employer either did or should. So then fundamentally, it's about portable, flexible, personalized insurances, benefits, and financial services products to those who work and act independently.
Okay, so how does that sort of practically work? Can I pick and mix my own one? Do you have like bundles together? And
yeah, good question, because we're pre-launch, launching Q1 of next year. But the idea is, you come to us. We take a quick data snapshot of you just to understand sort of you, the nature of work you do, the stage of life that you're at, sort of constructs. Drop that down into the engine we're building underneath it, which will then present back to you what we talk about being a customized bundle. Some products and services that, if nothing else, you should have in place.
Right.
So if you're that IT contractor, IT consultant, there's things like professional indemnity that you should have. Laptop, smartphone, these are, important tools of work for you. Cyber is becoming more and more relevant. Some income protection, things like that used to go into your standard sort of employee benefits package or offer. And then at that point, pick and mix, drag and drop. It constructs then to form a monthly subscription. You just take out the monthly subscription with us. We take care of all the downstream mumbo jumbo with the various providers. If anything goes wrong, you just deal with us. If you want to make a claim, you just deal with us. And you then drop down and become a member of the community that we're building underneath all of this, because it's not just independent workers. I think we've seen this more now with sort of Corona and COVID. The dynamics of people not being able to connect and hang out together, in the office, those water cooler moments, and so mental health and loneliness are amplified because of your independence. And we're looking to add some of those dimensions into our support structures as well.
That's brilliant. I think that's really important. I mean, something that I've touched on with every call, and it doesn't seem to matter who I talk to, whether it's people looking for work or whether it's clients, is the mental health element of what we're going through at the moment. Because I know personally for me, I mean, I did some training for 4 months on during lockdown, just trying to upskill myself, and the team it was all other recruitment business owners, senior recruitment people. We've all kept up with the same date in the diary, which is every Thursday at 9 o'clock, and we meet for a coffee, just because you're not having that interaction, and it's such a sanity. Yes, it just allows you to vent usually vent your frustrations. We basically meet to bitch every Thursday morning, and they feel better about it.
Oh, but that's what we as employees used to take for granted when we were part of an employer-employee work model.
Yeah,
it was those moments, just downloading, the sort of the casual appreciation every now and then. The ability to, if something was up, to go to someone and have a chat, and, either formally or informally, there was lots there to help you out along the way, which most of us used to just take for granted until you don't have them. And that's what now more and more people have sort of experienced and been exposed to, certainly as a result of COVID. I mean, these dynamics for the independent workforce were happening already. There's another big group now, which is those who have just, I'm going to say, who are facing redundancy and are being forced out, and they're now on their own, only to realize, gosh, now what do I do for support and assistance with some of this sort of stuff, as well as trying to find work and get back and get going. So lots of, these are genuine issues that people are facing. But I would suggest it's probably both full-time employed and those who work independently. I think for the independent, the risks are just, it's more precarious, that lifestyle. It's precarious in the good days, because it's not easy getting going, getting started, keeping on top of it. And there's just been another, massive challenge thrown at people. So soldier on, crack on.
Yeah, quite. And I think the more that we can do to kind of help people in those situations, I think the better. I think it's really challenging particularly at the moment, for people kind of finding themselves in this new world and facing up to, because you build, I think we touched on it briefly before we started recording, which is you build your world around the world. So if you're employed, regular income coming in, mortgages, school fees, etc., all those things get built into that, and you're not expecting that to change, but when it does, being self-employed is probably about being slightly more frugal. It's about having kind of a different sort of agenda. You probably have to keep more in the bank than you would expect to, and there's just different challenges. And I'm because I've been doing it personally myself quite a long time. A few of my friends have started their own ventures. It's interesting talking to them what they don't know. I mean, like a friend of mine was setting up their own recruitment thing, and for example, they didn't have professional indemnity insurance, and I said, I hope you never need it, but I would have some. Another friend had a much more physical job and didn't have because I haven't got any liability insurance, and and it's things like that companies are very cosseting. They look after you, and you only realize how much is there for you when you don't have it. But I still think within that, you still don't know necessarily the ins and outs. Why have I got a pension? You've got to find a pension for yourself. You've got to find all your insurances for yourself. And so having something simplistic that I can understand that bundles it for me.
That's kind of the idea behind it. And it's just, and then we're coaching and concierge with you along the way. We understand the journey you're on. I'm thinking about making the jump. I've made the jump. I've been doing it for I'm in growth and capacity kind of stuff.
Yeah.
And then showing up and being relevant along that journey with, coaching and advice and products and services. But it's interesting. You're right. We've got senior people. They've led organizations who are now out on their own and, a limited company, and then they can't get a bank account. Well, hang on a minute. I used to be, Captain Marvelous. But you're not now. You're independent. And we've got to go through our process. So, setting up a limited company for those down that end, getting a bank account, and forget about trying to get a mortgage. There's at the moment, the system is designed for the old world of full-time employees and the risk models associated with that. And our opportunity is in this new world. There's none of this. It's all designed. It's a broken model. So we're setting about taking it on.
Yeah, because you've got. Did I see that there's a new way that you do your risk scoring that you've created for yourselves? Because you touched on mortgages there, and I remember what an absolute circus that was when I was first self-employed trying to buy a house, and it was almost impossible. But they were going, affordability is fine, but we just won't lend you the money.
And it's bizarre, but actually now 50% of the market is made up of people who aren't full-time employees. So
exactly.
You're going to have to switch across. Yeah, look, as part of our world, we're developing a new risk score. It's just 100% focused on this freelance and gig economy, how people are choosing to live and work as part of that, to better represent them, because we think they're poorly treated at the moment, just as you were, and there's no really need for that. So it's called our FRISC score, FRISC, freelancer risk. Spelt with a C at the end to try and be cool and contemporary, but and it's just designed to have a laser-like focus on I'll say the positive characteristics that those who work independently hold aren't captured by traditional underwriting or credit models. And it's been well received so far, and it will drive the intelligence that better represents the independence, certainly as part of our structure, and enable them to get better deals on this sort of stuff, fairer deals, because we would argue that much better risk than the way they're currently being treated. And that's one of the challenges we're taking on.
Well, I'd certainly champion that as I'm looking to renew my mortgage at the moment. I'll let you know how I'll get on. So I want to go back because we've sort of started at the end, because you've had a really interesting career, and I said this the last time I recorded, but absolute theme of talking to everyone that's sort of running what's loosely termed an insurtech is this kind of varied career path, absolutely not linear, and talks to sort of entrepreneurship. So am I right in thinking you started in the banking world? Is that your sort of
probably gave it 2 halves really. So the first part was it was fintech before it was called fintech. So bank, financial trading systems, risk management, on the sort of .com #1, but as an independent. So I've kind of lived that freelance, independent, self-employed life, and I knew, how tough it was. But then I was like, I always wanted to do my own thing, and I kind of had, my wife says midlife crisis. I trying to say epiphany. If I don't do it now, I'm never going to do it kind of moment.
Yeah.
And she was absolutely right. It was completely the wrong moment. And I don't know if there's ever the right moment, but away we went. It was touched on the future of work, but it was actually interested in the aging workforce.
Yes.
And it was an organization and how that is impacting organizations and society. And it actually fuels this independent model, as I mentioned earlier. But so it was called the Positive Aging Company. It was about helping organize, understand their aging employee profile. They think about it mostly negative. We would be arguing that there's a lot of positive, and there's value there to be had. So it was health tech, data analytics, employee benefits, SaaS-based platform. Ran that for a few years, ended up getting acquired by Mercer. So went across with that business. And, that was kind of same thing. I mean, the advice I got before all of that was look to understand demographics, because if you understand demographics, they drive markets. You can't fight demographics.
Yeah.
So the one at that point was around this aging population. And so we sort of rode on the back of that. Yeah, ended up inside Mercer, was with them for a couple of years. And then...
What was that transition like? So because you start a business, it's small, grows, becomes successful, and then you have to slot into this massive machine.
Yeah.
Was that the challenging bit? Because...
how I don't need to tell you how that story is going to end. Look, I'll say there was more lessons learned, and it's probably on both sides. Everything they wanted from us, we were small, but we were onto something, and we were agile and innovative and startup and techie, and and had a little bit of a profile, and we're doing well. And they wanted that because they were trying to, I'll say, innovate internally within their organization. They knew move from conservative, and it was all wrapped up into trying to drive internal change.
Yeah.
Unfortunately, when you go across small startup into a big corporate, and you just become sort of a department almost, and a cost center, the dynamics, it's just oil and water. And I think the industry, so this would have probably been, almost 5 years ago now. They're better at it because it was early then, as funny as it sounds, and there's been more of it. And it's still challenging. Any startups who go into large corporates, unless you're really, really clever or careful, it's a challenge. And it was like that for us, certainly with inside Mercer. And I think, they quite rightly said, I mean, their expertise is huge acquisitions of huge companies, and they just bash it together and let it go about its business. So we kind of got caught up in the backwash of 2 other huge acquisitions in the same sort of, and our very sort of small and meaningless in the end to what was going on. But it is what it is. And, from our side, from my side personally, I had the itch almost straight away to go again with my next startup. And this is where it's now, is that a curse or is that a quality? Time will tell.
That's the thing, because you've jumped ahead to the sort of aging solutions bit, but I had to ask you, because it's on your LinkedIn profile, about the thing that should have been YouTube, Rabbit TV.
That's the one that really hurts. I mean,
really.
So this was in .com #1, and we had this idea. We're just going to create these silly little videos, bang advertising on it, bring them all together into this sort of online platform, and then for people to be able to click on it and email it amongst their friends.
Wow.
So that was the idea. And, we ran that 18 months, 2 years. The world just collapsed around us. So it all just, literally just came to a shut. But the number of times since then, people have said, I remember you guys were YouTube before YouTube.
Oh, no. Oh, God.
And it's not just, once is pleasing, but when you hear it over 100 times, it's just like, it becomes torture. It still keeps me.
Please stop saying that. Unless you've got $1 billion check to give me.
Yeah. And it's like the one that got away.
Yeah.
But I mean, does it drive me or drive me mad? Probably a combination of both. So
do you think that speaks to something? Because that's a hard one, because it's like, it's not a loss. Like, people say, oh, you got to take your losses and your wins. Those are the frustrating ones, when it's sort of, you didn't lose, it didn't collapse, it just didn't fly, and then you go, yeah, the idea was right, but it just wasn't, it didn't go.
Yeah, it's a good question, and that's a good point. I'll say I've had a couple where 2 months in, it's like, nah, it's not going to go.
Yeah.
Maybe it would have, maybe it wouldn't have.
Yeah.
Chop. So to have one that was, I'll say heading in the right direction and was, at the time we just weren't able to validate it for it to catch fire. And I think that's that's where luck and timing comes into, a lot of this stuff. There's lots of good ideas out there. Execution, luck, timing, resilience, persistence. Those are the dynamics that help, nudge them along. And I'm trying to think of the famous saying, there's some crappy ideas that have gone on because they've had some luck along the way, and there's been some good ideas that should have and haven't. So probably a combination.
I think. What sort of period of time was that? I can't remember. Sort of when were you doing Rabbit TV? So that was sort of 2000.
Yeah, 1999 to 2001. So it was right in
there.
And it was crazy days, because 98, 99, the internet just exploded. Companies born overnight, big valuations, lots of champagne and fanfare. It was amazing. And then literally it just dropped like a stone. Lights were turned off, and then it took, some of it's just the scars. It took, back to the day job for 2 or 3 years to pay off the debts and for the injuries to recover, and then you start to get twitchy and about what's next.
No, I hear you. Do you think there's something about the psyche of investment? Because I was talking to someone about this the other day, that prior to COVID, I was having these conversations, in that, I worked through the financial crisis and saw what that looked like. I've specialized in insurance my whole career in this space, so it was tough, but not like banking. We just had to deal with all the ex-banking recruitment people coming in and telling everyone they could do insurance now. Safe haven and everything. But it feels like people have short memories, because the banking crisis was preceded by, obviously, these huge personal debts and credit cards and mortgages. And I was just speaking to people that were getting 35-year mortgages, 37-year mortgages. And I was like, personally, for me, I'm like, if you're taking a mortgage that long, it suggests that you're buying a house that you is too expensive, or you don't need it, or something like that.
Yeah.
And so it just appears to me that we were in a similar cycle. And I kind of think if you look at the kind of investments, IPOs that we've had recently, there's huge valuations of companies that even in their submission documents are suggesting that they've got a business model that has inherent risk. That's not to say they can't make money. But I just wonder whether whether we're in a bubble, I don't know. But I just think we're going back to a time where if it's the right, almost we're at the risk of, if it's the right buzzwords, it's going to go, which is why sometimes good ideas don't go, because they don't hit on the right touch points.
Yeah. Good question. And I think, what is it? Yes, you're right. Markets go in cycles. There's sort of been those almost every 7-year punches in the face for whatever reason. I think there's always, and this is from just trying to reflect back across my memory and experience, there's always those group of investors who just keep throwing the money in, combination of optimism and ignorance, which gives that inflation, even with the warning. WeWork is probably the one that's most relevant to our sector. And you were just watching that journey, and everyone, it was like, this is just smoke and mirrors. But how come, significant investors, global players are just pouring in behind it? Are we the dumb ones? Only for it to play out as the story everyone knew it was going to be. So I just think it's just market dynamics. There's enough people with enough money to just blindly throw it at it, and it doesn't affect them, but it affects the rest of us if it doesn't work.
Yeah.
Which is not not right.
Yeah. No, exactly. I mean, as I say, certainly I don't have a crystal ball, but when you sit there going, in the sector that I know relatively well, I'm a service provider to insurance, so I can't pertain to be. I know insurance better than some people, but obviously not as well as the people that are truly the market. But it is interesting seeing some of these kind of acquisitions, IPOs, because I hope everything flies. I'm certainly not anyone that wants to sit there and see anything fail, because it's bad for my business. It's better for people to be growing and hiring. But it is interesting that it follows the kind of certain trends and things that people are just interested in. From a kind of buzzword, it's the right sector, it's hitting the right kind of notches, and then people follow that, rather than some ideas I look at and go, oh, that idea is brilliant, and it just doesn't hit the momentum you expect it.
Yeah. So I'll say it's a long way from early stage startup with a big idea, and we continually on a daily basis are looking to validate bigger and stronger that idea, to that thing being relevant and interesting to the incumbent.
Yes.
There's a lot of steps in the elevator to get to that.
Yeah.
To relevance. If that's kind of what you're getting at.
Yeah. I think so. One thing I've noticed in your career as well is and this is, you had a side hustle before side hustle was a side hustle, because there's a lot of your career where you may have been contracting. Now I know that about you, but for example, I think you were working at BNP Paribas when you're also running something called Knockout Academy, and then you wrote a book as well.
Yes.
Yeah. So.
And someone brought that on the weekend. So talk about long tail. That I just get a ping from Amazon. It's like, wow, how bizarre. So it was called Follow Me Out the Door, and it was about that, and it was a side hustle, because I always, I always had that when I was doing my corporate stuff. thinking, dabbling, playing, and wanting to. And the mentoring, the coaching I got at the time was working on the side until it's got enough momentum to almost, you'll never replace your day job until you're sort of you're well along, but it's not a cold cut and you're just going to sort of make a brave jump, so to speak. So that's kind of where those activities were running in parallel. Yeah, as you said, side hustle before side hustle.
Yeah, it just sounds like you're a glutton for punishment, Mike. You're just like, right, do you think that speaks to something about to sort of really make it as an entrepreneur? Because my new phrase is that like everyone's got one good book in them, every insurance professional thinks they've got one good insurtech in them. But there's something about the entrepreneurial mindset. That kind of restlessness, or
I think one of the aha moments I had, I don't know if you know the guys over at 90 Consulting, but they've got they do this little thing and they've broken it down, and it's on the mindset. And they've got what they call there's this pioneer. You got the pioneering mindset. You're the ones who go charging out that way. You don't know if the world is flat or round. And you're always out there looking for, chasing for, exploring, thinking. And then coming behind you, there's this population, they're the settlers. They start to make sense. They follow you sort of, you haven't died, you're still sending postcards, so we'll follow in behind you. Then there's the third group, which are the town planners. These little satellites are established now and you need a little bit of sort of structure and organization into it, and it starts to grow and to take shape. And then the fourth group are the bureaucrats and the regulators. These things have now settled, been planned, are taking shape. They need law and order and structure. And it was, each of us fits quite nicely into one of those four. And for me, it's always been that pioneer, crazy, and it is crazy, and precarious and wild, and not comfortable. And it's not for everyone. But following in behind that, there are places, and it's about knowing where you fit within that. So for me, these startups, it's that early crazy journey. I'll say the first 3 years of it, and then it's all going well, of the size and a scale that it needs to be handed over to others to take it from there. So I've always had that itch, or curse, to be confirmed.
Well, I think that's interesting, because I think that's the theme that I'm seeing. But also, I think by breaking it down like that, what that concedes is that without the kind of support structure that follows behind, without the kind of town planners and the, I mean, I think we could do without the bureaucrats, but let's say everyone else that follows, eventually the pioneer will be out on his own and die, right? Probably starvation or dehydration or whatever. And you'll like this segue. You've built a really good team, I've noticed. And I was wondering how you went about that, because I think that's one of the challenges, is that you're an ideas guy. I think most people have the idea, but particularly if it's a tech play and they're not a tech person. And I don't know whether you would or wouldn't consider yourself a sort of tech person as such, but you've got a CTO, I know, but you've also got a board of advisors. How did you go about putting that together? How did that happen?
I think in the early days, and I think this comes from experience, it's great being just all the ideas going and so forth, but you need to set up that base camp and double check and triple check. So along the way, you get introduced to good people. And I think where it's come to us is these are great people from inside the industry who are just starting to explore for different reasons. So some of them are looking to develop, sort of their NED experience. Some are starting to think about retirement and portfolio lifestyle. Some have kind of hit the ceiling. They know their job inside out and are looking for a little bit more contemporary exposure, thinking, opportunity. So we get introduced to lots of people, and along the way, so you share your story. and they either like it or they don't. And the ones that like it then start to become more engaged. And then I think it's good sense for early stage startups to have an advisory board wrapped around them, because it's a win-win. They're getting the opportunity, the good, the bad, and the ugly. We involve them in everything that we're doing. We treat them as, team members. And then from their point of view, they're getting access to the craziness of a startup, and they're able to utilize their network and connections, get some exposure and experience in the way this world works and how it can marry back to their, we always talk about what you've got going on in the now and what you want to get to next. And we can help, our little experience and exposure can help you with both of those. So it's always been a win-win. And we're really fortunate the people we've got wrapped around us, they're world class, and it just adds so much to your bench. But from a proposition point of view, to have that validation from industry experts also gives you confidence. So it's by design.
I was going to say, that really speaks to me in terms of, because, focusing on senior level hires in a certain area, you don't make that many that year. I think that's the probably letting the secrets out there. But when you work in my profession, you're not shifting like loads of people, voluminous amounts of people. It's very much about meeting people, and you build this network, and then obviously there's an academic part of it. If you're saying, right, find me the best of one specific type of job, you map the whole market, you find out who everyone is, where they are, what they're like, you do the research, but you do come back to this network of people that you've kind of met, and you just go, those are where the matches, there's where the proactive matching happens. So it's kind of this meeting of, by design, as you say, but also kind of by the sort of experience of and I love the way you said telling your story, because I think that's what it is. Recruitment of any nature is telling stories, and what makes Mike, your story interesting to the point where someone wants to join. And I think that's what people need to focus on. But it's something you seem very conscious of, is that you have to have the best story for people to want to join you.
Yes. I agree with you. It's all about storytelling. And the other thing which jumped out then is, as an industry, if everyone's looking at their crystal ball, it's ecosystems. And really all we're doing is an ecosystem now of people to wrap around our world. And it works that way. But I think the essence is the story. And we freely share our story, and there's been people that have gravitated towards it. And that's kind of almost, I don't know, it's one of the triggers for us. You've got to be passionate about this future of work and the opportunity and the challenges that it poses. Because if you get that bit, then our bit kind of makes sense. And then the energy and enthusiasm just starts to happen naturally. I'm conscious of your time, so I won't take up too much more of it. But I wanted to ask you about, you've been involved in some sort of innovation incubation type labs. Quite recently, you did the FinTech Essentia one, wasn't it? Yes.
I think some people are always interested in how you get involved in those. What was the experience like? It'd be good to hear a bit about kind of that experience, really.
I'm a believer in them, and there's a school of thought out there is, you can spend all your time in accelerators and take your eye off the ball. Well, I go about it completely the other way. We are building an ecosystem. We are building a network. Our experience, so all of them work differently, and all of them are pitched at different, organizations or fintech, insurtech, data, whatever. Some of them are dilutive, some of them aren't. So they're all very different, but fundamentally, they've all got well-meaning people driving the accelerator or wrapped around the accelerator as mentors or channel partners who are interested in helping you out.
Yes.
So for us, it's just been free firepower and some really interesting, passionate people along the way, some of which have now bolted on to, Team Portabl. The ability to fill your pipeline, if you and I were to try and go out and reach, let's say 20 innovation teams within European insurtechs, we'd be going at it probably for the year.
Yeah.
This gets consolidated into a 3-month program with sort of managed introductions. So for us, it's always been about brilliant help, positive energy, pipeline, and just more good networked people. And it's played out for us. So I'm a big believer in it. And I'm also been in it enough times to know there's some good things about them and there's some bad things about them. So, from a startup's point of view, it means everything to be involved, and we're looking to just try and get a deal done, or get a POC, or get a pilot opportunity, or at the end of the day, in its purest terms, get some sort of cash in some shape or form into our business. And predominantly on the corporate side, it's less about that. It's about seeing and hearing good ideas, possibly introducing them back into the business, possibly taking the IP and trying to recreate it back in the business, or possibly being seen to be, innovative and involved in the ecosystem. So sometimes there is that disconnect that still plays out, but I always say, it's kind of on us as the startups, back to that hustle word. It's hard to get into these programs. There's an application process often. Once you're in, you can't wait for it to come to you. You've got to get after it. And then at the end of it, one or two of these quite significant connections is meaningful in the journey.
Yeah. And I think sometimes people want to derive too much direct value from things as well. So like they'll be in one of these going, well, we didn't get investment directly from that, so therefore it wasn't useful. Whereas I think, you keep saying networking ecosystem, and so much of, something that's happening in my business that came from a conversation where I was genuinely just engaging with someone. I met them for a coffee back when you could do that sort of thing. And then another person asked me for a bit of help, and I've ended up kind of putting these two people together in a very non-traditional way. But that was 8 months ago, that these things happened. At the time, it was just, why not expand that network? Because do you think networking quite often gets a bit of a bad press? It's always networking, it has a bit of a negative connotation sometimes, I think.
Look, I know it does. I love it. But there's actually a term that's called, I'll share you the link afterwards.
Yeah.
I think linky brains. There's those of us out there that just got a brain that likes to link things together, ideas to people to people. And when we do it, it makes no sense to most of the people. But when it happens, something happens. And it's like, oh, now I know why the introduction was happening.
Okay.
But that's kind of what networking is, to me. It's but we're also quite disciplined in it. Give 5 times before you ask. So it's not, but that's that pay forward kind of thing, which again, within an ecosystem, really becomes quite powerful. So for me, it's fundamental to business. And to good business, because if you're helping people out along the way, hopefully something every now and then comes back your way. So
yeah,
but I'm game on.
Yeah, no, I'm exactly the same school. I just think, trying to do look, and I don't get it right all the time, but if you're trying to do the right thing, is always the right thing, and you will be remembered down the line as going, he's a good guy, and you never know when that might come useful. You never know when it's, I know, I mean, we see it on LinkedIn all the time. I walked past a person I thought was homeless and gave him £5, and I turned up and he was interviewing for me for the job, and all these, absolute made up nonsense, but the sentiment is the right one, is that you never know where people are going to end up in your journey, because these journeys are always longer than you think, and you never know how much that's going to be helpful down the line. So if you try and do the right thing, generally seems to be the right idea.
Yeah, mate, I'll happily take all the help we can get, and we happily give all the help we can give. So
yeah. So I mean, on that, and just to finish up, you sort of mentioned fundraising. Where are you on Portabl's journey? When can we expect? Because I'm on your mailing list. I'm waiting for my invite to be live.
Look, I'll say we're positively overwhelmed, and that's also part of that early stage jungle. You try and be focused, but especially with Corona and COVID, we're getting a lot coming to us, and even the insurance partners. Everyone's interested now in this future of work. They're seeing sort of group risk in the old world and this fragmented new world. So distribution opportunity for them through us. So we're under pressure now just to get cracking, which is why we're doing our first raise. We cross our fingers that there seems to be something close now. It's all designed just to sort of fast track everything we've got going on.
Sure.
To be launched, beta launch in sort of Q1 of 21 with a fair wind. And, then after that, it's really just those early stage milestones that startups and, our first partners want to see. So sort of first happy members and first revenues, and then we've got big ideas. Well, there you go. We started with the cheap ideas going, we'll end with some big ideas. Can't help myself. We've got big plans on how we want to take this, and it's all designed just to better serve and support the independent and their family, of which there's going to be more, and of which leading a very risky life at the moment through no choice of their own. But so we're on a mission, I think.
Yeah, and look, I think that's the perfect place to end it. But I'm absolutely behind you, because I think it's a really underserved market. I think there's a lot of kind of complexity, and obviously someone who works independently and has done for some time, I know how much that support's needed, and particularly, as you say, like sadly in this moment there's going to be more people joining that sort of portfolio workplace, and it doesn't matter how much we dress it up, it can be a difficult and challenging place to be, with the uncertainty. So something like Portabl that makes it a simpler, more easy to access process is really, really welcome. So obviously from us at the Liip, we wish you all the best on the fundraising journey.
Don't get me wrong, we need it, because raising funds over Zoom, not easy, but hey, we're almost there. So fingers crossed, and I appreciate you making the time today to hear our story, Alex. And happy to help anyone out there in the world of the Liip. Yeah. We're a resource, so feel free to call on me.
Thank you. Thanks for that, Mike. All the best.
All right. Cheers, matey.
Bye.